Hi guys, welcome to another video. So today is after market close is US time, Eastern time, 6 o'clock. So today the biggest news is about the Google's fine. Okay, it's been 2.7 billion fine to the European to the EU. Okay, so the stock price has stumbled for about 3%. So it's now closed at $969 per share. And then the company parent company called Alphabet is going to do an appeal that if the 2.7 billion fine it can be written off. Okay, so right now it's kind of written off for now. So expected that Google is announcing the report that they will they will have to be having a 28% growth of their net profit, net income. But now, as of right now, because of the fine, it's turned back to decrease in profit of 28% because of the 2.7 billion fine. Okay, so right now we'll break down some points that whether or not Alphabet is still a good stock to invest. So first of all, if you have been visiting our channel for like more than a few months, you probably know that by the time in November to January, we talk about how Donald Trump, people are pretty scared about how Donald Trump will do something to the big techs. Okay, so one of the tech stock they're pretty worried about is Alphabet and also Apple and Facebook, right? By that time, I said it is pretty much a good chance to kick into the market and invest in Amazon and Google and Facebook, stuff like that. And then that's the reason why, because Donald Trump is a businessman. He's just doing something to grab attention, and is at least that's not the most prioritized thing that he's do being the president. So back then, the stock price was around only $700 to $800 per share. So right now it's $1,000 per share. So I think that let's break down if there's any investment opportunities going on in Alphabet, this stock. So the thing is, people are worried about the Google is this only the start of the penalty from the EU. Okay, so that may be really the case, but we know that after the appeal and the second fine, it will already take at least 6 months, if not 18 months to 24 months. Okay, so it may probably, because of the $2.7 billion has already written up is financial statements, right? So probably in the next at least 6 to 24 months, they may not probably be punished or penalized again. But that is not really a solid proof. But let's think about that, because the $2.7 billion has already written off, right? But if they have successfully appealed, the $2.7 billion will be back to Google's and Alphabet's pocket, right? So the second thing is about the doing business and advertisement business in the Euro market. So people are pretty scared that just like China, they will ban Google for good. That may not happen, right? That may really not happen. But people are pretty scared that because the advertisement business is that the advertising business in Europe is contributed in collectively about 33% of its advertisement business. Okay, so people are pretty worried about that. But again, they're not really kicking Google up, just like Facebook and Amazon. Why not? There are two reasons why people are not talking about and making fines to Facebook and Amazon, right? Because Facebook and Amazon, they really users are all going into the Facebook and Amazon. But the second reason is about the algorithm, because of the apps and everything that you using, for example, WhatsApp and advertisement and email and stuff. They use the data and sell you and do some subliminal advertising inside their app and websites, right? Not that they are not doing the same thing as Google, but they're doing smartly. Okay, so after that, don't you believe that Google is going to have a series of meetings of revising the algorithm, as long as they have the interface that you can use? There are 6 to 7 apps that are more than billion users. Okay, like Google Maps and the emails and stuff like that. They can do the advertisement, but maybe this time they may not able to do advertising as strongly and as solid as before. But using the growth of around 20, we expect about 20% or 25%. That is the lower limit of their profits for next year. Okay, so given that the fine is happening, given that the appeal will not be successful, the P ratio right now is around 33 times P ratio. So let's say that it would drop back to 28 times or 25 times. So any time that Google will hit $820 is very, very attractive. Okay, so that's the fundamental side that you should think of in terms of valuation. So think about that. Even you buy Google, invest in Google at the peak, at the $1,000 per share, and dropping back to $820 is only 17% of investing in something that is long term. Imagine if you buy a house, it dropped by 8%, 10%, you won't really be so panicked, right? But something that you can do, if you follow my suggestion that you have invested in Google or in Alphabet already, just like me, for now, I'm not doing anything. I didn't sell anything at all, okay? If you're really afraid and you don't want to face downside risk of 70%, I think that's really pretty much reasonable. If it's going back to 800 per share level, I will buy a little bit more, okay? But if you don't have extra cash, you can sell one half and even one half, okay? So by the time if it hits the top again, like let's say $1,010, you can technically you can repurchase, you invest the second half of the capital inside into the Alphabet stock, okay? But unfortunately, if it drops and break below the gap, let's say it's the $880 per share, then you can probably leave one half in your hand, or you can even sell the remaining and buy something else, okay? That's your choice. But for me, I will hold at least one half. That's my suggestion. But if you have never invested in Google and you really think that it's going to be dead in advertisement and stuff will be really bad, and you can I suggest you can invest in its rival, for example, Facebook, okay? They're doing pretty good in advertising, okay? But one thing that Google has almost patented, what is that? Is the promotion per click, okay? Because of the special environment and ecosystem in the Google and YouTube environment, per click promotion can almost be happen within Alphabet and within Google. It cannot really happen in Facebook, but in Facebook that you can also suggest, you can also make yourself invest in Facebook. This stock is pretty strong stock. I'm also holding in Facebook. As long as the big data and the advertising market, and as long as it's bull market, I'll invest in something that is trying to leverage the investment in the bull market. So Facebook is another stock that you might probably want to consider if you are afraid that something bad will happen to Google. So Facebook is now closed at $165, as you can buy it anytime now, as long as you can hold it to the gap. For example, the top of this pattern, and also the gap is around $155 per share, and then as long as it breaks below that, you can cut loss. So that's around like 8% loss. That is, for example, for whichever businesses you're investing in, just 8% loss is downside risk is pretty minimized, okay? So or you can also invest in Amazon. Amazon is the biggest seller. They have their own brands of clothing brand lines and batteries, stuff like that. And it's as long as you can see a pattern going up, the red channel you can see. So the bottom of the red channel is going up. It's now around $980. So if you buy it now, if you cut loss and $980 is pretty much downside risk is pretty much limited. And if the stock price will be able to stay within this channel for another few weeks, okay, so the bottom channel will be going up and the cut loss level will be going up like to $1,000 or maybe $1,020. And by then, if you cut loss, it becomes cutting profit, okay? So something like that is really good to invest in fundamentally or even technically, okay? So if you can invest in that, the target will be upper channel, upper band of the channel is around almost $1,080 to $1,100 per share. So that's about it. What I want to talk about is the 3 big tech companies that you may want to consider if there's chance to invest in. Of course, the market is going bad. For example, the FOMC meeting coming up on the 2 days. If anything bad and the US dollar is dropping a lot, like breaking below the 91.9 level, which I talked about it last week, then the capital will be leaving United States for really crazily. Okay, it's going to be insane. The stock markets will be going down, and really that you should hold your cash and wait for the adjustment to finish and kick into the stocks. Not to tell yourself that the stock is pretty good, so I only invest in stock. I would never look at the capital, in the money flow, cash flow, and the markets. That's really wrong. Whenever you buy something, whether it's good or bad stocks and assets, you always have to look at the stock markets, what they are doing, and the market behavior and psychology behind. So if the psychologies and the markets behind are positive, and as long as you also that you have the good assets aligned, that's pretty much yes, and then the chance of profiting it will be a lot higher. Don't do stupid moves, make smart decisions. I'll see you next time. Investing make easy. Goodbye.